something big just happened, and almost no one's talking about it. In the last 14 days, Wall Street's biggest players started quietly pouring billions into AI again. But here's the twist. They're not chasing hype. They're targeting 3 specific companies that are becoming essential to the future of artificial intelligence. One is building the custom brains of AI systems. Another is dominating the global chip supply chain. And the third? It's become the oxygen tank fueling the entire AI ecosystem. This isn't a trend, it's a transformation. And if you're looking to get ahead of the next wave, these are the stocks you need to know. Let's break down the 3 AI giants Wall Street is betting on right now in June, and why they could be the smartest buys of the summer. Taiwan Semiconductor TSMC, ticker TSM. You might not hear its name in headlines as often as Nvidia or Apple, but Taiwan Semiconductor Manufacturing Company, or TSMC, is the invisible engine behind nearly every major AI chip on the planet. TSMC manufactures over 90% of the world's most advanced chips, whether it's Nvidia's H100 GPU, Apple's M3 processor, or Broadcom's custom silicon. They're all brought to life in TSMC's fabs. The company's precision manufacturing is years ahead of competitors, enabling it to cram billions of transistors into chips the size of a fingernail with impressive efficiency and scale. Financially, TSMC is delivering at a high level. $90 billion in revenue, a gross margin of 56%, and earnings per share of $7.77. Even more impressive, they're raising chip prices 10% globally and up to 30% in the US, and demand is still rising. With a forward PE of just 21 and a PEG ratio under 0.7, TSMC is a rare AI growth stock that still trades like a value play. Yes, there are geopolitical risks, especially with tensions around Taiwan, but if companies like Nvidia and Apple want to release their next big thing tomorrow, there's still only one company that can make it happen, and that's TSMC. Broadcom, ticker Broadcom. Broadcom is often dismissed as a legacy chip company focused on wireless and broadband, but behind the scenes, it's undergoing a quiet transformation into a major AI player. Its secret weapon? Custom-built silicon, known as ASICs, application-specific integrated circuits. These aren't general-purpose processors. They're precision-engineered chips built to do one task incredibly well, whether it's powering a voice assistant real-time translation or an AI recommendation engine. Broadcom is designing these chips for the biggest names in tech, hyperscalers, cloud providers, and yes, even Apple. The company forecasts that just 3 of its clients could represent a $60 to $90 billion addressable market by 2027. That's a staggering number, and it shows how custom AI chips are becoming the brains of smart devices everywhere, from smartphones and cars to smart home appliances. There are risks. Developing these chips is expensive, and losing a big client could hurt. But if AI is going to live in every device we use, Broadcom is positioning itself as a key enabler. At $1.1 trillion market cap, with 60% gross margins, a 1% dividend yield, and earnings per share of $2.70, Broadcom offers a compelling mix of growth and income. Nvidia, ticker Nvidia. Of course, no AI conversation is complete without mentioning Nvidia, the undisputed king of AI hardware. Over the past 2 years, Nvidia has evolved from a graphics card powerhouse to the infrastructure backbone of the AI world. It now commands over 80% of the AI-focused GPU market. Whether it's OpenAI training GPT models or Meta launching large language models, chances are it's happening on Nvidia hardware. But Nvidia's true moat isn't just in GPUs. It's CUDA, their proprietary software platform, which has become essential to modern AI development. This creates a sticky ecosystem that makes it extremely difficult for competitors to catch up. Financially, Nvidia is a beast. $130 billion in revenue, 75% gross margins, and a market cap north of $3 trillion. Even after its huge run, it trades at a forward PE of around 31 with a PEG ratio of just 0.6, meaning its earnings growth still far outpaces its valuation. Yes, there are concerns like export restrictions to China and supply chain bottlenecks, but demand is simply shifting to the Middle East, India, and domestic cloud giants like Microsoft and Amazon. In short, Nvidia isn't slowing down, it's scaling up. And in the arms race for AI supremacy, it's still the go-to supplier. So there you have it, TSMC, Broadcom, and Nvidia, three AI giants, each playing a critical role in the tech revolution. TSMC is the irreplaceable manufacturer, Broadcom is crafting the next wave of custom chips, and Nvidia is dominating both the hardware and software of AI infrastructure. Together, they form a triangle that's powering the next era of technology. But now, I want to hear from you. If this bull market in AI keeps building momentum, what's the signal that tells you it's go time? Is it a Fed pivot? Tech earnings breaking out? Drop your thoughts in the comments. I read everyone. And if you're looking for the next Nvidia, check out this video right here, where I break down 3 AI stocks with even more explosive growth potential.